my name is Samir Luther. I'm one of the organizers for this conference, and I'm really excited to be here with Jeff Pietras of WorldRemit. WorldRemit is in the international money transfer space, and I'm particularly excited to have Jeff for two reasons. Well, one, because this is one of the few speakers that we have here today really speaking from an international perspective. WorldRemit is based in London. They opened their offices in in Denver last year. And Jeff has years of experience in the European and Middle East and Africa space, starting with JP Morgan, Nokia, Yahoo, and most recently prior to WorldRemit at Western Union. Jeff opened up the office in Denver last year. So on a personal note, I'm really excited to have Jeff here because we just discovered that we're both from St. Louis originally, and that makes me happy because that's not very common here. So to kick it off, I'd really like, Jeff, if you could talk about just the general international money transfer space, what it looks like.
Sure. Thanks for that, Samir. So the World Bank seems to be probably the best authority in the international remittances space. There's a lot of gray areas to the market, but at least the official figures are that international remittances is on a steady growth. It's about a $600 billion US dollar market in 2015. Over 400 billion of that are remittances sent to the developing markets. And maybe just to put a little bit of perspective to that, international aid is probably only a third of that, so about 150 billion in international aid that many markets send to these developing markets is dwarfed by remittances. That would be comprising what we call the diaspora communities, immigrant, migrant workers who have gone abroad and are continuing to support their economies back home, is a traditional use case. If you think about it, some of the, even in the news, Nepal, for example, migrant workforces in the Gulf and in India represent 30% of the GDP for that market alone. Another key remittance corridor is to the Philippines, so remittances represent 10% of overall GDP. So it's a reality. I think many people in the US think of it as maybe a convenience or luxury type of service. It's actually a lifeline in terms of the support that these individuals and families rely on. Maybe then just briefly about, as Samir said, I did spend a bit of time, less than a year at Western Union. I was brought in with my mobile and kind of digital background to look at digitizing that business. And you can't always change the path of a big incumbent and a dinosaur company, at least in terms of technology. So. But what, inside knowledge of an incumbent and a money transfer operator like Western Union or MoneyGram, what's happening in this space is it's quite an archaic business model. It's largely an agent-based model reliant on cash, and in some cases dirty cash. I think we've seen a lot of banks and other regulatory back away from this business because of some of those problems around compliance and AML. Which would be money laundering. Also, it's plagued by high costs to those migrants sending their hard-earned money back home, and the inconveniences of poor customer experience and what are generally seen as inconveniences of the traditional agent-based model. WorldRemit is filling a space, a digital upstart. And maybe just briefly on what's happening with remittances digitally, because I think at least here in the US there are a number of other players also in the same space, that currently about 5% of global transactions are initiated through digital platforms. So it is still a ripe opportunity to disrupt.
So only 5% are initiated digitally?
Correct.
So I'm just curious, just to get a sense from audience, who here has ever had to use international transfer service like Western Union, MoneyGram, SWIFT transfers? All right, good. So we've got some experience here. So how does WorldRemit differ? What makes it special?
So first off, as I mentioned, we're a digital-only platform. So we don't operate an agent-based model. So there would be no brick and mortar presence to WorldRemit. Another aspect is the global nature of the business. We are in 51 send markets, operating to around 120 receive markets. So those comprise the corridors. So for example, US to India, UK to Nigeria, et cetera. What we offer is, as a digital business, a lower cost basis. If you think about things, everything from pen and paper aspects to compliance, which are quite normal in the standard industry, through to the operating costs of having at least what Western Union and some other players claim to have 500,000 points of sale, there are often high burdens to operate that particular model. So as a digital-only platform, we offer and pass along those savings to the customer in terms of lower transfer fees, easy things like 24/7, ease of convenience. Another area that's, like I mentioned, within that convenience factor to the traditional side of the business is it's plagued by very poor customer service. People often don't speak the same language. They're dealing with an agent base that is often reliant on shopkeepers, postal agents, people who know nothing about money transfer to get into the scale distribution game are upselling these services. So it's very poor customer service plagues the industry, and our particular model being online, we're able to do a bit more hand-holding, provide a level of customer support, and our particular instance, we have 91% approval rating. So trying to change that poor customer experience. And then I mentioned the compliance aspect. Regulators like a fully transparent model. We don't accept cash, so there is a tracking record on every one of our consumers, so that know your customer element is quite key.
Great. So my parents are from Kenya, and I spent the last summer there working with an e-commerce startup where Kenya is one of the most advanced mobile payment systems, or one of the most widely adopted, at least, in the world. And obviously, this is an area of particular importance for WorldRemit. And I believe you guys signed an agreement with MTN in January. Can you talk about how this plays into WorldRemit's strategy?
Sure. So yeah, as Samir was saying, I actually spent almost 7-8 years in the mobile industry working with Nokia and looking at financial inclusion and mobile financial services. So happy to maybe speak a bit more about what's happening there. But at least from the mobile wallet ecosystem, as we call it, I think it's important to not just focus on M-Pesa is a great success story. About 3 weeks ago, I was just telling Samir, I've just come back from meeting with them in Kenya. It's a huge correspondent or partner of ours, and we do thousands of transactions on a daily basis to that mobile wallet itself. But it's much bigger than just what's happening in a perfect storm over the past several years in East Africa. The industry tracks now some 260 of these mobile wallet ecosystems. They're taking off in Southeast Asia, in Latin America, and all over Africa. So my team at WorldRemit works with many of these partners. We're encroaching upon being the top player in terms of the number of partners. I think somebody's beat us by one partnership, which hopefully in the next few weeks we'll have signed our next deal, and I can say that conclusively that we are the top player. But yeah, so these ecosystems are popping up all over the regions, and if you think about it, there are about 2 billion unbanked, and 1 billion of those banked population actually have access to a mobile device. And this is kind of layering in my background in working in many of these developing markets from a mobile perspective. We want to ensure the interoperability of our service. And it's something that I didn't mention before. Of the difference with WorldRemit is on the receive side, we see ourselves as an interoperability platform, meaning whatever receiver innovations in the remittance market are there, be it a mobile wallet, be it the emergence of a banked population from a previously cash-only population, we want to ensure that through our digital platform, we offer that flexibility for the receiver. And that's been the case across Africa as well as several markets in Asia where we have these mobile wallet partnerships. A great one, again, maybe 2 months ago, I was in Zimbabwe. There, the mobile operator EcoNet Wireless operates a service across Southern Africa called EcoCash. And it's a classic example, similar to Kenya, but has its differences. Largely agrarian population in Zimbabwe, outside the capital city of Harare, and huge underbanked population. Consumers were looking at, sometimes spending $20 to travel into the capital city region to receive a cash pickup of $100 only. So imagine the immediacy of a mobile transfer that's a cost of $4 and is as immediate as an SMS. So what we've managed to do is single-handedly take over all of the cash-based pickup business and enable, 80-90% of the business to that corridor in Zimbabwe via one partner in this EcoCash solution. So that's an exciting reality in the right markets. We're, as I mentioned, an enabler. We can't create the markets in terms of their readiness and willingness to accept mobile transfer. A lot of times that has to be there in terms of the interoperability of the system, in terms of cash in, cash out, a network of point of sale, and we're picking the right partners who are able and ready to receive international remittances.
Great. Okay, so I mentioned at the beginning that you just opened the office in Denver, and I believe you opened that with an investment of 100 million US backed. So what does that mean to move from London to the US? What does that look like for WorldRemit?
Yeah, so you mentioned the 100 million. I think that was quite an interesting kind of newsworthy event in this space because many of the digital upstarts in this industry have all been formed out of Silicon Valley or the East or West Coast in the US. And this was really the first time, and actually sitting in the audience, I heard somebody mention, what's really happening in Europe or the rest of the world with FinTech? Well, I can at least tell you in London, it's alive and very well. And I'll talk about that in a bit of what it means to operate in a disruptive industry outside of a large market presence like the US. And I say this, as an American who's spent most of my career working in the developing markets, now back and growing an entity in my home market. It's interesting to see. Sometimes you can become blinded by the big home field advantage, and that's, in my view, what often happens is some of our competitors, Zoom, for example, or even the digital upstarts of Western Union and MoneyGram, they're digitizing their businesses, but they're focusing first and foremost on the $100 billion US market in terms of remittances. Of that 600 billion, it's a big aspect of the business. But what it means, if you think about it, even from a regulatory perspective, we're in 30 of the US states right now. It's an individual licensing application, and that takes time and effort. In terms of internationally, I mentioned the 51 send markets. That includes all of Europe, includes parts of the Middle East, it includes Australia, New Zealand, Hong Kong. We're moving to some 20 new markets in the next year, hopefully. Places like Brazil, Japan, Malaysia, Singapore, South Africa. So we're able to take advantage of a lot of the emergence of new corridors. There's a lot of south-to-south corridors, east-to-west corridors, and it's not just about the US, but we believe that understanding the scale and different market dynamics, and you get that when you're a London-based company that operates out of the EU and the 28 member states that might be one regulatory body, but it's very different from languages through to send and receive methods. And I think it's just that quickness and agility in terms of knowing that your own home field is a small market, be it the UK or France or Spain. If there's the appetite, you'll get the opportunity to scale quickly just because you know that you're not just targeting your home market. It's not big enough. And I think that sometimes the progress is stymied a little bit in the US because it's very much about home field advantage. So we're aiming to take those early mover advantages and many of our competitors don't have half the corridors or half the send markets. So you can cut those figures I've told you in half. Most of what Zoom or Western Union does is out of the US or Australia maybe, or 4 countries in Europe. And they don't serve half the markets that we do in Africa and Southeast Asia, for example, some really critical ones. Over 50% of our mobile wallet 50% of our transfers to Africa alone are that mobile wallet service that I mentioned. And again, that's early mover advantage for us because those are corridors not often served by our competition. And yeah, the 100 million investment was some seed round funding and first round with Excel partners. So early in with Facebook, again out of Silicon Valley, and most recent round was with TCV, the guys behind Spotify. So we're looking to take that money and obviously invest in function that I lead around business development, new partnerships, and growing our presence in the US. It's going to be our second biggest office. Within the next year, we should have over 100 people in Denver, hopefully. We currently have 200 people globally across offices in London, Denver, Sydney, Auckland, Hong Kong, and Montreal.
Did I understand you correctly? Did you just say that Western Union only has 4 send markets or 4 or 5 send markets?
I don't know their exact number, but with their digital offering, they have a couple of European markets, Canada, US, Australia, maybe New Zealand, tending to work just at the scale of where they have English language capabilities would be first. And then obviously where they have the digital resources. So they haven't reached the scale by far.
So, I mean, how does it work to be able to go to so many different markets? How are you able to scale that and make that efficient for WorldRemit?
So in terms of Europe, there is one regulatory authority that allows us to scale or passport our license out of London to the other 28 member states. And then it's a function of that's not enough of a home field advantage. So we built teams, and one of the first areas that you need to look at is the compliance aspect. So you do need to have feet on the ground in these outbound markets. So again, having a multilingual, kind of flexible, international-minded team, and it's easy for us to find that operating out of London, right? It's a very multinational city, and we're able to find people with the expertise and languages to navigate what are sometimes tricky regulatory markets that a lot of times the U.S. thinks are a bit of a hindrance or a barrier, are actually opportunities for us. So I would say it's 2 things in this business, as we're talking FinTech. One of them, of course, is the technology platform, but the second one is the people. So, I'm also here and happy to represent a growing disruptor in this space, but also to meet with and engage with smart, internationally minded people as we're on the lookout for good talent that's needed to grow our business.
So I think that's a good segue. So I think you may have already said as much as you might on this, but what's next for WorldRemit?
Yeah, so obviously continuing to finalize a lot of our licensing in the US. All of these applications are in. Hopefully in the next several months we'll be fully operational out of the US. Looking at new outbound markets, looking at new correspondence or partnerships to deliver the service the way that consumers would like to receive the money. We're always on the lookout. And again, looking at further driving and enhancing the mobile first opportunity that we believe in this market. We started out in 2009 as a PC-based application. This past year we've done native app development, and within a matter of months we've shifted. We do about 250,000 transactions per month, and we've shifted the number of transactions that are initiated on mobile or mobile desktop are now 2/3 of our business, and that's from nothing about 6 months ago. So continuing to double down on our mobile efforts. And that's interesting to me because the education, when you're already initiating a transfer in a mobile environment, the stickiness is there. Mobile is ubiquitous. It's always on. It's with you. So we find that the lifetime customer value of our registered users is much higher than the traditional players. Secondly, the usage and frequency. Traditionally, this business is a remitter might be seen in your channel once per month at payday, let's say. We're seeing almost double the frequency of usage. If you think about it, it's the ease and convenience of an always-on application. When you have that extra money, you're able to send it. And then along those lines of with mobile, I'm a big believer of changing some of the power dynamics from sender to receiver side innovation is also something we're looking at. So as I mentioned, a lot of these receivers have the mobile device and they're receiving on that mobile device. How do we put a bit more of the power in their hands? They might be reliant on the remittance for support or other purposes in country, but can we change some of that dynamic and look at the behavior and frequency through a receiver-driven application would be quite interesting. So expecting to develop more insight and more product development in that area.
Great. Well, we have a few minutes for questions. I don't know if we have a runner for the mic, but we'll go ahead and start. David, right?
Hi, I'm a risk manager and I cover FX, so this is hence my question. If it's possible to say, I'm interested in hearing, like how, this involves foreign exchange. I guess is there a lot of the flow internalized? Like if someone wants to buy euros, sell dollars, or do you go through like a prime broker or something, or just kind of curious if it's possible to say.
Yeah, I mean we're not in the same space as TransferWise, for example, another European startup that is probably more what you're referring to. We're obviously taking a position in dealing with settlement in various either fiat or local currencies. But it's probably more a traditional case. It's most of the deals that we're doing. We're looking at the passing on to the consumer the lower transfer fee, and we're able to obviously share a portion of the transfer fee in handing over that relationship with the correspondent, the partner, who's kind of the last mile delivering of the service. But the typical FX arbitrage opportunity, of course, is there. Another way to make money in this, but more along the traditional lines. We're obviously taking and settling a position in particular currencies, but that's not the secret in the sauce, I guess.
So I think we had a question from Sasha and then Dushyant.
Yeah, hi, Sasha from Sloan. You just mentioned TransferWise, and I wanted to get your input on how you see the competitive situation. Who are your competitors? There's Currency Fair, there's WeSwap, they're all actually UK-based, all of them. So you're focusing obviously on remittances, that's in your company's name, but do you also look at other markets and business models like peer-to-peer, for example, which TransferWise is trying to do?
Yeah, so I mean, maybe it's not the right terminology, but I always consider what TransferWise is trying to do as a bit of a champagne problem. I myself lived for many years in London and had accounts that I was sending money back to in the US, and what's the best way to do that. I probably might have been a good customer of theirs had that existed a few years back, of trying to send from British pounds into US dollars. But they're always going to be present where there is this need for not necessarily support, right? These are individuals working across different EU member states or transatlantic. Theirs is a developed market consumer, I would say, and the majority of where I would expect the growth in that business to come. Whereas we're truly a global player in terms of our customer base are what we refer to as diaspora. Migrants, they could be first, second, third generation, installed for quite some time, so not always migrant workers. and it's more a classic use case of support, whether it be for emergency purposes or just a usual expectation. This is, talk to anybody who's been abroad, the expectation, especially in some Eastern and African communities, is that those who go abroad will continue to support. So in that case, there are several players in this market, but again, more niche. Zoom is obviously one of the bigger competitors here in the US, and then you have players like Remitly, which originally started as niche to the Philippines corridor, now is expanding to other big markets by trying to be very relevant to those diaspora communities, whether they be Indians or overseas Chinese or Filipinos. So again, that's the space that we operate in, and it's more about providing a convenient, flexible solution to support the global diaspora, the migrants, as opposed to one that's looking at supporting those who are in developed markets, looking for arbitrage opportunities for investment properties or just the free flow of their assets, which is probably more where you're seeing some of these currency-based developing companies and startups out of Europe focused on.
Thank you.
Dushyant?
Great. Thanks, Jeff, for taking our time. Just tell us a little bit about how do you sort of engender and foster loyalty amongst customers in the space, which I would think would be very sort of price sensitive. Mm-hmm. And obviously you can offer initially lower prices or better than Western Union, but how do you sort of keep that edge and just tease out what are the other aspects beyond convenience, cost, ease of use? What else can you sort of focus on in terms of engendering loyalty?
Yeah, so price is one of the biggest determinants. And in many of the corridors that we serve, I call them the long, thin corridors. So these would be much of Africa and parts of Southeast Asia beyond places like India, China, and Philippines, which are very established remittance markets, which are quite cost competitive even with the traditional MTOs or money transfer operators. So I did touch upon it. One of the other areas is you're seeing it, not just in our vertical, but across all marketplaces, which is the rise of the customer, right? Being very customer-centric, especially in a digital interface such as the one WorldRemit operates in. So in an industry plagued by poor customer experience, there's a lot of switching. There's a lot of loss out of the funnel with traditional MTOs. People go from Western Union one week, go to MoneyGram the next, use a bank. They're shopping based on all of those channels I've described are generally poor customer experiences, and they're just being based on price. Where we've built some loyalty with our customers is around that customer experience, knowing that remittances is often a gray area. If operationally you're not delivering upon the promise of in minutes or in hours, whether it be a bank deposit service or cash pickup, that's important to know that there is not just it's not falling into a black box or a gray area. You know what is happening, whether it be moving through various channels of a clearinghouse and then going into a banking institution, for example, or in particular, you can imagine in the past week, Nepal is a key corridor. And we're able to switch between various services that might be having outages. So we saw a spike in the number of transfers through airtime top-up, which is traditionally a lower principal amount sent, right? It's almost a complementary service to money transfer. And we saw people utilizing that to the maximum because the mobile networks were the first back on in Nepal, as opposed to the bank deposit and cash pickup options weren't there. How did that happen? That happened through our customer service touch point. It's a high touch point that we have, and actually I've just come from London, where sitting nearby my team is the customer service representative teams. Building out in Denver, again, these are not the Philippines, not Mexico, not Costa Rica. We're instilling in our culture, The knowledge. A lot of these are young graduates who are getting a feel for the business. They have finance backgrounds. They're able to educate our customers about what's happening and doing a bit of a heavy handhold, whereas this is an industry that I can tell you Western Union and the likes have all offshored that to people who can barely speak English and are probably working for Nike one day and for Western Union or somebody else the next. That leads to a poor customer experience. When your agent, again, like I mentioned, is not educated in a financial service, they're selling groceries, but yet they're processing a money transfer order, you're going to lead to poor experience. And that's something that, if you look at Trustpilot or anyone else, we're not the only ones. I mean, TransferWise, Azimo, some of these other competitors, Zoom, they have much higher thresholds and benchmarks in terms of customer experience. But that's one of the critical enablers is once people find us, and that's the most difficult because they're price shopping on the high street, in various channels. Once they find us, they stay with us because of that customer experience. So that's something that's not to be discounted.
So we have time for one last question.
Other than the perfect storm of Kenya and M-Pesa, how do you feel that the uptake of mobile money is? Are people generally just doing cash pickup, or are they also opting for mobile money as well?
Yeah. So with the mobile wallets, my team has to scout and be careful with when the ecosystem is prepared to receive what the industry and I in general are calling right now a killer application, which is international remittances. Because when the local ecosystem has all the aspects that you would expect of an enabled agent network, a POS, a point of sale, cash in, cash out functionalities, a replacement, if you will, for ATM withdrawal and all of the branched networks that we might see in the financial institutions here. When all of that is present and there's then a growing active user base, international remittance is a great killer application because if you think about it, most of these are domestic P2P type of plays where people are doing micro transactions in Kenyan shillings or whatever local currencies, and all of a sudden you have the ability one time to receive $300 US. That changes the user behavior most definitely, and mobile operators and consumers are more likely to uptake the service, and you're likely to see then a layering on effect of value add services, which is proper financial inclusion. These domestic systems are only one piece. Greater financial inclusion comes when you can layer in insurance, loans for small and medium enterprises. All of these are not really possible without the capital infusion of greater principal amounts which are happening through remittances.
So that's all the time we have for questions. Is there any last words that you'd like to share? No? All right.
Nope.
Well, thank you all. We're going to break for about 20 minutes, I think. If you have drinks or any trash with you, if you could please take it. We're not supposed to have those in here. But I'd like to thank Jeff for being here today. And